Hello, everyone, and welcome back to this week's TradeFinder Live. It's great to be back with you all during trading hours. I will be introducing Mr. Rob Roy here in just a few moments, but first and foremost, we have to cover our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Other than that, the market seems to like the tamer than expected PPI, but we still have the CPI tomorrow. A little bit of a rally today after yesterday's sell-off, so very interested to hear Rob's thoughts. And of course, very excited to interact with you all. So without further ado, the man of the hour, Mr. Rob Roy.
Hey, Zach. Good afternoon, everyone. Welcome to this week's TradeFinder Live as well. Yep, you're right. The tamer than expected PPI has put a bid under the market today. It wasn't a huge difference. Expected a 0.2 increase, and it came in at 1. So that kind of gives the Fed a little more leeway for the cutting cycle. The Fed Fund futures have it down to 100 basis points now. We were talking about 150 basis points of rate cuts through the January meeting that were priced in. So now it's at 100. Still looking for 50 basis points in September, though. So we'll see if that plays out. So let's take a look at the chart, and you can see how we move to the upside today. Now, over the weekend in the U.S. market update at the Elliott Wave Options channel, if you haven't seen it, go take a look. I talked about two particular scenarios that could play out with this movement in the market. Obviously, we know what happened last Monday, and then that seems to have been forgotten now. We're back above the 10-day moving average. We closed right on it yesterday. Small little gap above it today. There's still some speculation. Well, what if we get a hotter than expected CPI, a tamer than expected CPI? What will that do to margins? The PPI that came out today, remember, is at the wholesale price level. The CPI is at the retail price level. So you always look for the difference between the two to see if margins have a chance to be expanding or if they're contracting. So that's what will be looked at with the CPI report tomorrow. And then we have retail sales on Thursday, which will be heavily watched as well. But taking a look at where we are in the chart today, you can see that we opened higher after that report. The futures took off right after that 8:30 report came out. Now, what I was referring to in the U.S. market update is the two scenarios. Is one was that we continued higher off this move from last Monday, and we look to come up and fill this gap, which we've done today. So we've moved up, we've filled that gap. So both of these gaps have been filled. And now we're moving up towards a point of resistance there at 540. We are currently trading above the 50-day moving average. We'll see if we close there, but perhaps maybe we bump our heads a little bit here. But we're still free to move lower if that CPI report comes into something the market doesn't like. And then we turn and reverse and head back down. So let me show you the scenario for a downward move here in just a second. But I just wanted to show, because we had talked about this being one of the scenarios. So that one's playing out. Does this one continue? Do we break above this resistance level? Do we continue higher from here? Is this just a classic V bottom here? We're almost getting a little too vertical on the move up, but we went vertically down, and you know the rule: when you go vertically one direction, you oftentimes go vertically the other way. So now I want to show you the potential downside scenario, and that's a zigzag starting with this high right here, and then there's the low that occurred last Monday. And you can see we're still qualified because we're at a 67%, 68% right in there, B-wave retracement. I had mentioned that if we went up there, we'd probably get to the 61.8% level, which we did. And then that could bring us down to 100% extension, which means we would be right at the previous wave 4. That scenario comes into play if indeed this wave 5 is the completion. It didn't go to 100%, which means based on Elliott wave rules, if you have a wave 5 that doesn't go more than 100% extension, you expect to move back down to the previous 4. You usually do that in one of the corrective patterns, flat zigzags or triangles. and you can see this is a zigzag pattern to the downside. So this is still in play even with today's rally. There's a potential, and when I gave the two scenarios over the weekend, that both of them play out. We move up, fill that gap, test this level, and still roll over. But we are getting relatively close to the point where this downward zigzag would become disqualified. If we get above 70%, if Elliott was here, he would tell us then this is going to be disqualified. However, based on Fibonacci levels and what a believer he was in Fibonacci levels, he would concede that we could go up to 78.6 and roll over and still follow the rules. But his personal belief and his handwritten notes was that if you get to 70%, there's a high likelihood you're going to break 78.6. So there's difference between rules and guidelines. We talk about this all the time in Elliott Wave, and that's some of the things that would be considered guidelines based on his own viewpoints and notes. And so I've read not just his published materials, but everything I could find, his own personal notes, etc. Real quick, I wanted to, this is really cool with this zigzag. If you've been under a rock somewhere and haven't gotten a copy of this software, you can go get a free copy at hub.com. We are just now initiating the AI. So we have 200 available, or the Hub organization has 200 available spots. There's only like 30 left to be a founders member to get these AI signals that you hear me talk about a lot. So if you want to get involved in the software, you need to go to hub.com and take advantage of that before those spots are gone. Once they're gone, then the 200 founders are grandfathered in at a discounted price for all this AI. And after that, the price goes up. So last chance to take advantage of it if you haven't already. All right, so taking a look here at this zigzag pattern, we'll see if that plays out, what occurs from there. So we'll be watching two things today. One, the close today, if we can close above the 50-day moving average. And then tomorrow we'll be watching to see if we get follow through, if we can get above this point of resistance here at 540. If so, that likely disqualifies that downward zigzag that I just showed you. And perhaps all's good and we're off to the races. But we still have that CPI report and retail sales. Retail sales is interesting. It's not as important as the inflationary reports, obviously. And the CPI report is something the Fed looks at along with their favored metric, the PCE deflator, which comes out at the end of the month every month. All right, so let's move on and talk about where we are with interest rates. So I'm going to show you, because I know y'all ask about it in the market update all the time, the TLT as well. I think it's important to go a little bit longer on the curve. Notice rates are headed back lower once again. That's a good thing as far as the U.S. servicing their debt. It's a bad thing as far as it giving the government the opportunity to issue more debt, go further into debt. But as rates come down, it means that it doesn't cost as much, and so they don't feel like they need to get their fiscal house in order. We can just keep issuing more, robbing Peter to pay Paul, if you will. The other comment that I've made about rates going lower is when rates go down like this, it's likely indicating weakness in the economy, which we are seeing weakness in the economy. Even the companies that have been reporting good earnings and have been rewarded are still warning about changes in consumer trends. We saw the big Macy's news where they're closing, I think, 150 more stores, kind of reorganizing things. They own most of the property, but the whole world of retail is certainly changing. We'll probably look at Amazon before we're done today, but we're seeing cracking signs in the economy, and we have to see, will the Fed go 50 basis points? I've been on the record, as you know, of saying that I'm not sure they want to do anything before the election. It almost feels like their hand is forced, but will it be 25 basis points or 50? With the economic news coming in the way it is, showing the economy weakening. And the other thing that I wanted to mention is we could be moving into a recession. We've talked about that before. We could easily see that. And just because the Fed may cut rates in September doesn't mean we're going to avoid a recession. When the Fed either hikes or cuts rates, it takes a while for that to work through the economy. It's more like a big aircraft carrier turning in the ocean. It's a slow movement. It's not an instantaneous fix. So just because they cut rates doesn't mean that all is going to be good with the economy in the near term. It takes a while. And that's where the concern is that they're being late to the party comes in. There's no meeting in August. And clearly now, with this yen carry trade unwinding and kind of moving back to the upside in the markets, we're not going to get any sort of an emergency rate cut. So we are looking towards September and wondering if that will be 25 or 50 basis points. Notice that on the yen, we've just kind of stabilized. We had that unwinding. We had the big spike up because to unwind it, you got to buy yen, you sell dollars. So here's the US dollar that moved lower. And now everything is just kind of stopped. The dollar is consolidating here around 103. It broke that 104 because, again, they had to come back and buy the yen. And so that moved the yen to the upside, but it's stabilized. So it doesn't kind of feel like it's fully unwound yet. If it had, wouldn't the yen be all the way back down and the dollar moving even higher to the upside? So I think there's still a little bit of caution there that we could get another flash news item like we got last Sunday night before that big downward open on Monday. So it doesn't feel like that's completely done looking at the currency market. So we're certainly not all clear, even though we're having a nice day to the upside in the markets with that resistance, with that yen carry trade still hanging out there, etc. If we look at the VIX is moving lower. We're getting back down towards that 17.5 level, and kind of wondered if, and we actually were kind of joking about this a little bit on the insiders meeting. That's for alert subscribers only at evotrader.com. We do that on Thursday nights and have an extended Q&A there. And we were talking about was 17.5 that had been resistance for so long, as you can see, gonna become support. Are we going to move into a time of elevated volatility? And I think that's still likely. And I had actually just kind of threw out the comment, is 20 going to be the support after this big, massive move? Well, clearly that's not happening, but we can see this little gap here that we had in the VIX moving up. We've filled that gap. And people ask about using charting principles on the VIX. It still works. It's still a chart. So whether you're looking at LA Wave, whether you're following significant difference between the 10-day moving average or gaps getting filled, all those things still apply, even when you're looking at a chart of the VIX. So now we look to see, are we going to come down to that 17.5 level on the VIX? So like I said, we still have that CPI report tomorrow, so we keep an eye on that. Let's look at some of the other markets with the DIA. These charts are all going to be very similar. Notice a lot of the LA Wave 5-wave patterns went away with that big move because it violated the levels in the algorithm. And so now we're just looking at corrective patterns. And so we had this test here of those July highs, and then everything happened on Friday and Monday. Big move lower. We filled that gap. We haven't filled the higher gap. I know there's not much of one here. It's just this real small one, and it can be seen as insignificant, but we haven't gotten there yet. We are above the 10 and 50-day moving averages, trading right at the 30-day moving average as we are chatting this afternoon, and we'll see if we move up. So where we're awfully close to resistance on the S&P, we're not quite to that 400 level, which would be the coordinating resistance level on the DIA. So the DIA lagging just a little bit what's going on with the S&P. If we look at the Qs, we had a nice little gap up this morning. We're up towards that 50-day moving average, well above the 10-day moving average, and starting to get a bid back in those big tech names that you're so familiar with that had been hit so hard. And so we're starting to rebound here back to the upside. And the next level would be likely up here, would be the major point of resistance. There is some resistance where we are right now, right in this area here. But the big level would be up around 480 on the Qs if we can make it that far. But once again, notice how vertical the move is. And makes me nervous when we see these vertical moves. You have to be wary of things. Easy to get complacent when it feels like last Monday was a month ago, but it hasn't been that long since the market's got a bit of a jolt. And so nice recovery here, but we have to keep an eye on things. Don't take our eye off the ball, if you will. And we'll see if we can get this above the 50-day moving average on the Qs. And then the IWM, which came right back down into that range between 210 and 190. Same thing here. We had this vertical move up, and then we were chatting that it had gone through a nice consolidation, but it had created an ascending triangle. And as we've talked about so often, an ascending triangle doesn't mean an upside breakout any more than a descending triangle means a downside breakout. Some of you have heard that 1,000 times. But we did break to the downside out of that ascending triangle, and we broke below 210. We just went right through it, didn't even really kind of blink down below it. And now it feels like we're back in the range between 190 and 210 here on the IWM. The positive is that we have come back and tested the point of that triangle. That's one of the rules on corrective triangles. Same thing with gaps. You don't know when it's going to happen, but you know it's highly likely to happen. That once you have a triangle breakout, you come back and test the point of the breakout. And so we've done that. But this is kind of what I expected to happen here in the IWM, and talked about that in the weekend update, was that seems like some consolidation here is in order. And now you just kind of have to watch the IWM. We need to get back above 210 with a follow through day to be bullish again, the IWM. And we've got room to the downside that there's not a trade to initiate here, at least not yet. And you kind of have to look to, we'd have to break 190 to go short the IWM. So you're just kind of either sitting on your hands, maybe some sort of a sideways trade between that 190 and 210 range on the IWM. We've pretty much corrected the oversold condition away from the 10-day moving average. We're right back there now. So not much from a directional standpoint on the IWM. Now let's look at the cryptos. Bitcoin has come back. It also got hit last Monday, as you know, breaking below 50,000 for the first time in a while, but quickly recovering. Now we're back above 60,000. That's one of the key levels that's drawn there. And now we need to get back above the 50-day moving average. We're trading above the 10-day today. If we can get back above the 50-day moving average, perhaps we are set for another test of 70,000 on Bitcoin. We'll see how that plays out over the next couple of trading days. But we need first steps first, and we need to hold 60,000. So if we can hold this level, which we've been trading through it the past few days, but let's put a little distance above that 60,000 level. We'd have a little bit of resistance at 65,000 perhaps. But if we can get above the 50-day moving average, separate ourselves a little bit from 60,000, maybe we have a chance to go up and test 70,000 once again. Ethereum still lagging a bit, but at least above its 10-day moving average, trying to get back up and get up to that 3,000 level. That's going to be the resistance area now. But at least we're trading above the 10-day moving average. and look poised to at least come back and test that 3,000 level. We'll see if we can get above it. To get real bullish on Ethereum, you wouldn't want to see it back above 3,000 and then above the 50-day moving average. So a little bit more work to do on Ethereum, but at least above the 10-day moving average. So that is the first step. That's the first thing that we need, is above the 10-day moving average. And then let's go ahead and take a look at the metals. That's where the action is. Zach, I'm just going to give you a heads up. GLD is going to be the case study consideration for today. And you can see that we've caught a little bit of a bid here. So it seems like the metals are starting to feel comfortable with the fact that rates are going to be going lower. Now, just a note of caution here. So this is going to be a post, not an idea, Zach. So the fact that we haven't broken above that 230 level yet. So just a note here that it seems like we're ready to move up and break above that 230 level. If we had a more confirming DMI, then I would say that's an idea. But right here, you can see that although the ADX is turning up, and although the two directional indicators are separating, and we're a little bit bullish, we came here and kissed twice. I call that a kiss when the two directional indicators come together. Looks like they're about to have a cross, and they just touch each other and go back. It's amazing how often that happens. The fact that the ADX has not made it above 20 yet, it's not above the negative directional indicator yet. If that was there, if the DMI was confirming this, so this is just more of speculation on my part that we are going to break this level at 230 and move up. But if we had confirmation from the DMI, we'd put it as an idea rather than a post. But until we do that, this is just simply something that thrown out there. So that gives you the differentiation, and I'm sure Zach will explain that at the end when he puts it up there. So that's the idea on gold, but we are catching a bid here. We're at resistance at 230. Now let's see what's going on with silver, which has been lagging, and it still is. We are getting a little bit of a bid. We're trying to get above the 10-day moving average, not even showing that the buyers are in control on the two directional indicators on the DMI here. Still sellers in control here. And that's certainly concerning in silver. You could kind of play that into, well, will GLD actually break above 230? But we did have a move down towards this previous wave 4. We got awfully close. Maybe that's enough. But oftentimes you actually come down and touch that level. And that concerns me a little bit about silver. We got above the 10-day moving average yesterday. Now we're back below it today, trading basically right on it. But I just think you have to keep in the back of your minds, there is a chance that we still see 24 here and that we make it to the bottom of this bar where the wave 4 is located. I know it's easy to say, well, look at that. I mean, that low is awfully close. Nothing's 100%. Usually these lines actually get touched, but not always, but a high percentage of the time. So that's why I'm still just a little bit cautious on silver, a little more cautious on silver than gold. Maybe we need to come down here first before we take off, or maybe not. Maybe that's going to be one of the cases. Well, close is good enough, and we're moving higher. But we got to get back above the 50-day moving average here on SLV. So there's some work to do there on SLV. We got to get above 26. We got to get above the 50-day moving average. Not quite as constructive of a chart on silver as we have on gold. Let me show you natural gas real quick. We talked about this last week and the weekend. Felt like when that wave 3 ended, you know the rules. Everybody pretty much agrees in the LA wave world that wave 3 is the strongest. A lot of people tell you to stay away from it because you don't know where the wave 3 is going to end. My argument and what we show in the AI impulse strategy is that if there's a zigzag within the wave three, you do have a good idea of when the wave three is going to end. Without one, it's harder. And there wasn't one in UNG. It was a mono wave down. So it was difficult to know where the wave three was going to end. And my commentary, if you've been watching, you know this to be true, was once that wave three ended, seemed likely to come back up and test 15. That was support for a very long time. We went through it, came back up, tested it, went down, and now we're right back up here and we're testing that 15 level. So that was the expectation. Now we need to find out, where's this wave four going to end? How far up are we going to go in the wave four? And will this Elliott wave, 5-wave pattern hold together? If so, then we're looking at lower lows in UNG. But if we can continue to power higher and maybe disqualify this pattern, we got a long way to go. It's just barely labeling the wave four. Notice it's green, so the algorithm thinks the wave four is still underway. It's only basically at the 23.6% level, so we could move a little higher. We could break above 15, but I think that could act as some resistance, at least short term, because it was support for so long there. And then looking at oil, if you remember that was our case study consideration for last week. Oil moving back up, the USO moving back up to 75, and look at that, it did it in one day. So we posted the close of that the next day. Hopefully you followed that. I know some of you did because you made comments on the YouTube channel that you did. So yeah, that was a nice one, a nice one-day move all the way back up to 75. And note we've continued that move higher on USO. Now we're a little bit overbought and we've got all these gaps here. So what's going to happen in the world of USO? So I'm going to take this off and you can see that it looks like a zigzag there, but that B wave correction may be too far. It may be disqualified. Let's take a look and see what that looks like. And nope, it's still qualified. It's basically right where the S&P is. So there's a potential still for a reversal back lower in oil. If we start to see recessionary signs, we start to see more signs that the consumer is weakening, perhaps. We did have the data that I talked about either last week or the week before that showed that we set a record for cars on the vehicles on the road this year. So not everybody has an electric vehicle, so people are still spending money at the pump. But this is a qualified, not confirmed. Difference between qualified and confirmed. We have all that education on our website at ewotrader.com. Difference between the terminologies. But maybe we continue higher here and this becomes disqualified. But for now, because it's qualified, you just have to keep it in the back of your mind as a possibility. Specifically since we got a little bit overbought from the 10-day moving average and these gaps here that need to be filled. But we are above the 50-day moving average. If we consolidate here, then perhaps we take off again in USO and move higher. We will have resistance not too far above where we are right here, just above 80. There will be some resistance if indeed USO continues higher. So little bit of cloudiness there as far as where USO goes from here. The easy move was that one up to 75. Now it gets a little bit more challenging as to where it could go from here. So I did want to show a couple of our previous case studies that we took off. And I didn't show them last week, but they worked out really well if you were following them. We had Campbell Soup to go up to 49, and you can see it went above 50. So that one was a nice one. And then notice after it hit our target, now it's reversed back down. Now it's back below 49, but that worked well. And then we also had SBAC, which was our case study from the 30th of July. Campbell Soup was on the 23rd, and the target price was 227, and we blew through that one too. So two nice ones if you've been following these case study considerations on TradeFinder and then USO. So boom, 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 three nice gainers in a row on these case study considerations. So hopefully you've been following those. Hopefully you've enjoyed them. As I said, I know some of you have because you made comments and positive comments are very much appreciated. We all know how things work. When somebody's upset, they tell 7 people. When they're happy, they may tell 1. It's just psychology. And it's been a good month here on these case study considerations recently. So I did want to show TLT. I said I would show that. And this is prices. Remember, TNX shows yields on the 10-year. TLT shows prices on the 20-year. Prices going up, so yields are going down. That is just kind of given the idea. It's 2 things, I think, going on here. One, weakening in the economy, weakening in the consumer. We'll have to see if we get an official recession or not. That's 2 quarters of negative GDP indicates an official recession. We'll see if that does happen or not. Or just the fact that with that lower PPI, perhaps they're assuming the CPI will be tame as well, and that does give the Fed a little more room to act perhaps a little bit sooner than they might have. Whether or not that's in time or not, I've already been speculating on, so we'll leave it that. So with that, Zach, I'll go ahead and get some questions now and see what the folks are interested in.
Absolutely. Thanks for a great presentation there, Rob, yet again. So you covered some crypto a bit earlier, and I think this is a good demonstration moment. For a question from Charles P360. I trade Bitcoin. I don't use Elliott Wave. Question: does Elliott Wave play out as well in Bitcoin and crypto as it does on stocks? So I think you might be excited to show the historical analysis with Elliott Wave on Bitcoin.
Oh, it's been amazing on Bitcoin. Yeah, going back in time, it was just absolutely nailing it. Let me condense the chart here a little bit. Let's go to the weekly chart. I think that could be helpful to show. But going back a ways, the patterns were just really spot on. You can see here 61% on the wave 4 correction, and there was the extension. That's what you expect. You had the vertical move up, came back down, came right back down to the 61.8. Then you got the extension move there. And then back here in these areas, when I really wasn't watching Bitcoin too much, it was still working extremely well. So even on the longer term, and now look where we are currently on the weekly chart here. Where you can see the wave 4 is right at that 38.2% level. Maybe that's enough, and we turn and go up. A lot of people calling for 100,000 Bitcoin. Well, that's being shown in the weekly chart here as the wave 5 target. It's right framing it, so it does seem like that's where we are headed. But not only can you look at Elliott Wave on longer charts, you can look at it on shorter term as well. So the 3-minute chart, you can see that right now where we are, we're in a very strong wave 3 move to the upside, perhaps getting a little bit extended here. So maybe we get a little bit of a pullback at some point throughout the trading day. But really nice, strong wave 3 move here. And that's on the 3-minute chart of Bitcoin. So the long-winded answer is my experience is that the algorithm has been very spot on with Bitcoin. And basically, in general rules, when you're looking at Elliott Wave, one of the guidelines is the more liquid the security that you're putting Elliott Wave on, the more accurate it is. It's just kind of the nature of how the Elliott Wave algorithm works. And obviously, Bitcoin is heavily traded, lots of volume on it. So it tends to work out pretty well. Now, at this point in time, on the daily chart, you would be just a tiny bit cautious because we're right at that 50% retracement level. And if it holds there and rolls over, then maybe we need to go lower before we go higher. But if we power higher, then this pattern can become disqualified. But for now, I think you have to be just a bit cautious here when we're right in that 50 to 61.8% corrective level, that tends to be a strong level of resistance. So maybe if nothing else, we bump our heads here for a bit on Bitcoin, which is then where you would look for that shorter time frame. I like the 3-minute chart, but you can pick your own time frame that you like to look at. But sorry to take so long to answer that question, but you could have just said yes.
No worries. I think it was good to go back and show I'm a visual learner myself. I'm sure I'm not the only one out there in that camp. Roland here says, "Hi, Rob. What do you say about Ivy Gilbert's comment? Market sentiment is the primary driver of the stock market, not external events nor news or unwinding yen trade." Thanks.
In general terms, I would agree with that. That market sentiment, the put call ratio is one that I like to look at as an options trader. That's a sentiment indicator. When it's in the middle, it doesn't tell you anything. But when it gets to an extreme, anytime you're above 1.0 on the put call ratio, that means more people are buying puts than calls. So that can be an elevated indication of bearishness. I also like the investor sentiment indicator as well, and follow that. So I think it doesn't mean when we're going to turn on a dime when sentiment gets extreme, but over the short to intermediate term, I think it works. I think there's a lot of factors that play. I think volume is big in the markets as well. But sentiment, when it gets to an extreme level, I think is a very good indicator of when we're likely to see turns. Again, it doesn't mean that it's going to happen that day, but my viewpoint is it's the extremes in sentiment that are the really good indicators. And when it's somewhere in between, like on the put call ratio, by zero point 0.7 to 1.0, it stays in that area a lot. So you would have to get a very low reading on the put call ratio to say everybody's buying calls. Well, if everybody views the market one way, we all know what happens. The market is highly likely to go the opposite direction. And that's where sentiment gets too far on one side, because the easy trade is the other way. And that's what the market tends to do. So, in general terms, I would agree with that. Just look at other things as well.
Very well. Thanks, Rob. Trade Simple here would like you to look at JetBlue, JBlue.
Gosh, we haven't looked at that one in a while. See what's going on with the airlines have been crazy, and this stock is no different. Had this big move up here. We had this long trading range, so we did look at it a while back because of drawing these lines. Another cool thing about the software is when you've looked at something and you draw lines on there and then you leave it, it remembers what you drew. You don't have to just go back and redraw everything again. So especially when we're having things like this where we have Q&A, people look at symbols. So we haven't looked at it in a couple months, but it remembers where it was when we looked at it before, and it was a trading range between 5 and 7. And then we went up and tested that there at the end of July, and now we're going down here. And so, the whole market goes extreme one way, it often goes extreme the other way. So we got above 7 there briefly, and now we're trading below 5 here. And will that be brief as well? It's in a wave 3. There is a zigzag there, so we can get an idea of whether or not that's the end of this move or not. So we draw this here. Yeah, right near the 50% level. So perhaps a little bit lower on JetBlue, get down more towards 4. But we are a bit oversold right now from the 10-day moving average. So maybe we get a short-term bounce back up towards this 10-day moving average, or at least back up to test the 5 level. But that'll be a key on JetBlue is, do we come back up and test 5? I would think we probably do that before we move lower, because that's a pretty good separation there between where we're trading and the 10-day moving average. So a move back up towards 5 allows the 10-day moving average to come back down, and then we'll find out whether or not we can get back above 5, or if we are going to roll over and head back down towards 4 again. But so I think a very short term and these oversold bounces or oversold corrections. I've been mentioning this, and I just want to be, they don't last a long time. Sometimes they're one day. They're usually 1 to 3 days, and that's it. So when I say an oversold bounce, a real short, quick one is possible here. I do think we come back and test 5, and then we'll see if we can get back above it. Don't know how heavily institutionally owned JetBlue is. My summation is that a lot of institutions probably do have it. Since it's a single dollar stock, you have to have aggressive growth as their investment objective to own single digit stocks. And so we'll see if they want to come in and support it, because if it hangs around below 5 too long, even they have to get out. And then it looks to move if it moves lower, which would happen if institutions got out. Then you start looking at pink sheets. So I don't really think that happens. It seems like those that are aggressive minded would come in and support it, but we'll see. But for now, 5 is the key. But thanks for asking,
Thanks,
because
Rob.
we hadn't
Great
looked at that
insight
in a
there.
while. It ties in with what we were talking about last time.
Absolutely. I couldn't agree more. And there's a follow-up question from Trade Simple as well. Can you provide your opinion on the overall travel sector as a whole? Do you think that it's trading low, anticipating a recession?
I do think, oil moving back up isn't going to help. I do think that perhaps that oil rolls back over. But, if we looked at some of the cruise lines like Royal Caribbean, you can see that they're pulling back a bit. Everything did on Monday, though. So we kind of have to wait a little bit longer for all that to play out. We're forming a bit of a triangle here on Royal Caribbean, but the general answer to your question is, yeah, I think we're seeing a bit of we're coming out of the summer, the travel season. If we do go into a recession, perhaps they don't start booking further out. I know the cruise lines, from my conversations coming out of the pandemic, were booked for a couple years. We're kind of working through that as well. And I think, yeah, we could see some more weakness in the travel industry with a coming recession and consumer trends that we're seeing now.
Thanks, Rob. Next up, we have Will, who would like to look at DKNG. Don't get me wrong, DKNG looking weak, but it may bounce soon.
Good old DraftKings. And you would think that perhaps there would be a coming bounce. I'm with you there, Will, because NFL is about to start. That's their biggest driver of commerce, if you will, with DraftKings. We completed the wave 5 to the downside. See, that wave 4 barely held on there at the 78.6% level, but it did. We went down right in the middle of this tap box, so right where we were targeted to go. And at 122%, we're a bit extended. So I'm with you there, Will. I think we could see a bit of a bounce here in anticipation of football season getting started again. I'd just be very surprised if that doesn't create at least a shorter term bounce up into the stock. Now, when it bounces, it's got a pretty clean slate up to here, right through this area here. So around 37 and a half is where it's going to run into some resistance. But I think you're on a pretty good. It's speculative at this point, because we're not even back above the 10-day moving average yet. But if you have speculative money, I think you'd do a whole lot worse than picking this one. I think this one is ripe for a bounce back to the upside. With you got fantasy football, all the stuff that's about to get going. I'd be really surprised if we didn't see a bounce higher here. Not that the market hasn't surprised me before, but I like this one. I think you got a good one there, Will.
And we'll give you props on USO. Said I sold a day too soon. Good call on your part. I know we covered crypto. Did you get into coin? I know we had ETH and BTC up there.
I did not show Coinbase, and we haven't looked at it in a while. So let's show it. Um, this has been a little surprising to me. It tends to kind of go along with Bitcoin, but even when all those coins were being dumped from the US and German governments and other crypto exchanges and stuff, they were being put on Coinbase. So Coinbase is still showing activity. When their next earnings comes, I'm not sure when that would be, but I feel like that would be um, potentially a surprise to the upside. So we had this wave three move lower. It's pretty much just that last Monday, though, created that. We've come back up. We filled that gap. So right in here, the key for Coinbase is fairly simple. We're right here at resistance at that big round number of 200. If it rolls over, then we're probably coming all the way back down here to 150 because there's just nothing to stop it. If it hadn't have been that big, huge move in one day last Monday, we probably would have seen all the way down to 150 in a couple days. So same scenario here. The move up from 150 to 200 was pretty straight up. So if we roll over here, I think there's a great chance we come down to 150 and maybe lower if this 5-wave pattern stays intact. So far, it's saying the wave three is not done yet. So we could roll over, but the other end of the coin. So it's just watch where we are right now on Coinbase because 200 is the key. If we can get back above the 200 level with a follow through day, then maybe this pattern becomes disqualified, and then you could see a pretty clear path to run back up and test those highs that are back up at resistance around 275. So Coinbase, pretty easy to handicap right here. We're at the level that matters at 200, so keep an eye on it. So just to summarize once again, if it rolls over, I think 150 is in the cards. If we can get above 200 with follow through, then we could see a move back to 275. So right now at this moment, watch it, see how it handles 200, and in the coming days, you might have a pretty good trade on your hands.
Very well, Rob. Well, you are having a outflow of gratitude in the chat, so I just want to make sure I made you aware of that. We have a symbol here from Jean Claude, and then after that, maybe I'll show everyone how to post on the platform.
Sounds great.
All right, let's look at BOX.
Another one we haven't looked at in a while. So box and no 5-wave pattern right now, which is interesting. We've been pretty much in a big trading range here. We got above it back there in the beginning of the year, and then it turned around and came right back. And this, what we talk about so often, Zach. Unfortunately, when it broke 28, it did it vertically, and so it goes vertically up, comes back down. It tried to hold above it, but yeah, it comes vertically back down, but it had to retrace that vertical move. So then it got back into this trading range. We tested it there in the beginning of June. We tested it at the end of July. We're testing it again now. So 28 being the upper end of the trading range. And you can make a case for a couple different patterns here, I think. I think it's pretty clear that the first level of support is right there at 26. So we've got a bit of a range there between 28 and 26 is the key right through here. If we were to break below 26, then the next level is at 25. So we have more support down here at 25. So you've got a corridor of support there between 25 and 26. But if we can break above 28 with a follow through day, then we could be off and running here. So we're right there. We're right at that level that matters. So this is very similar to what we were just talking about with Coinbase. Keep an eye on this right here. See how it handles 28. If it rolls over, highly likely it's coming all the way back down to test 26 again. If it can break above it with a follow through day, then you might have a nice bullish trade on your hands there and may take off and run. So just I would just be watching it right now and see how it handles this 28 level. That's key. So yeah, we haven't looked at that one in a while. So I'm glad we brought that one up.
Yeah, it was nice to bring that one up. So at this time, I might transition over to the platform to post the post that Rob mentioned a bit earlier. So as we can see here, this is the dashboard view, the menu jumping off point that you will receive upon entering your credentials into the Hub dashboard. We won't take up too much time. It's been an interesting couple days to the week so far, and I'm sure all of you out there would like to get back to the markets along with Rob and myself. So as you can see here, we have the new idea button up here, and that will give you the option to then create an idea or a post if the criteria that Rob was mentioning before for GLD was met, such as maybe the ADX touching that 20 level, or if he liked what he saw from the negative directional indicator, then we could have maybe had a legit idea, which means that you're setting a time frame, almost entering a contract as if you're paper trading. But for this one, as Rob mentioned, we are just going to kind of leave this as a discussion post as we wait for that criteria to be met. So I believe, Rob, you're looking for GLD to get up to that 230 level.
Break above 230. So
break above
230.
Alrighty, and we will again come back and make this pretty, but the main key to take away from a post versus to differentiate against an idea is that this will just essentially be like a discussion board, as if you're just commenting on any other forum. You have all of your idea or all of the criteria that is met currently, and also might include what you're looking for to be fulfilled before actually making it a legit idea. So I will come in and Rob and I both will make sure this is nice and pretty right after this session is over, so you can comment, interact in it. We interact with it, rather. We highly encourage interaction with all of the community on the platform. That's the greatest way to learn and grow in this world of complex options trading. So thanks for another very informal session there, Rob. I'll pass back over to you with closing thoughts.
All right. Appreciate everybody's attention. I just wanted to reference this GLD chart one more time here on the opportunity. And Zach stated it very well. It would have been an idea if the DMI confirmed it. It's a post, but one of the other reasons I'm looking at it is we had this big symmetrical triangle here. It broke out. It looks like it's giving us a follow through day today. And so we should have about a 10, 15 point move, which could bring us maybe as high as 240 there. So that's just another little tidbit there on why we're looking at the chart of GLD. But thanks for showing them that, Zach, and I hope everybody's taking advantage of all those great features on the social media aspect of the software. It's an amazing piece of software. It does so much, and as you play around with it, you're just going to enjoy it more and more. All right, so let's get back to the market. Let's see how things close today, and then all eyes on that CPI report tomorrow, and that'll give us an idea going back to the S&P on whether or not we roll over or break through that resistance level, and we're off and running in anticipation of rate cuts again. So we'll see what happens tomorrow. So thanks again for spending some time with us. Have a great afternoon. Look forward to talking again soon. Take care, everybody.